You're watching News.Markets. Lloyd's Q3 results look pretty positive in terms of profits, growth and recovery, but yet another PPI charge put a dampener on things. Meanwhile, news from Barclays confirmed the appointment of investment banker Jez Staley as new CEO, an appointment perhaps responding to investor criticism that the bank was losing focus on investment banking. So what is happening with UK banks and where's the investment opportunity? Well, Mike Van Delken, Head of Research at News.Markets, joins me now. Thanks ever so much for coming in. Now, Barclays, Staley's been on their radar for many years. We heard back in 2012 he lost out to that plum position. Do you think this is the right move? Is this enough for investors?
I think it's a signal that Barclays is prepared to go back to the real profits generator, which was Barcap. Now, while that was looked upon as maybe the reason for many of its problems in the past, and it led to the ousting of Bob Diamond, the background of this new CEO is very much investment banking focused. So while the last couple of years have been more on retail, and maybe that's a bit more public friendly, I think this is a signal, given his background, that it's prepared now to move back to a more investment banking focus, which was a real profit generator for so many years. So if anything, positive for investors, because the returns should improve.
So the markets might like that.
I think so, yeah.
What about Lloyd's though? PPI, it just seems to be that story that keeps on giving, or taking from the banks.
It's not going to go away soon, I'm afraid. Everyone got very excited recently at the prospect of a light at the end of the tunnel, and PPI claims having a sell-by date, if you like, that they had to be in by 2018. This just shows that, that is a long way off, a good couple of years. In fact, it's not even confirmed. I think we have to wait until early next year. So another fine this quarter. I'm afraid those fines are probably set to appear quarter in, quarter out. But they are dwindling, and it is in the face of rising profits and an improving backdrop for Lloyd's, which has been through a real restructuring. And it is, for me, probably the pick of the bunch in terms of the UK banks, in terms of potential, notably on an income and a dividend yield side. So
pick of the bunch for you
I
is
think
Lloyd's.
So, yeah.
It's interesting though when you look at about ABN AMRO. So the Dutch government are now going to be relisting it, possibly by the end of the year. And of course, they were one of the big high-profile casualties of the financial crisis. The terms they're offering look like pretty juicy dividends for investors. When that's on offer, what have UK banks got to lure and to be as attractive to investors?
Well, of course, the UK banks ended up with not much dividends to offer because they were cut in the wake of the financial crisis. We've just had Lloyd's resume. Hopes are next that RBS will follow suit, but it has a lot more restructuring to complete. And then we've got Barclays, HSBC, Standard Chartered, a bit more solid, and they're still there. But in terms of the juicy dividends from someone like ABN, obviously the yield depends on what the shares actually list at. So any yield can only be speculated upon, although the payout ratio that they're proposing is quite healthy, and it should lead to decent income. But it's an interesting sign of the times that the Dutch government feels confident enough that it can bring ABN back to the market after, as you say, a very difficult and troubled period during the financial crisis.
So prospects, would you put your money with European banks, UK banks, or keep the spread across it all?
I think you'd have to keep it spread. Banks, don't forget, they're a very good indicator of economic growth. They're very much on investors' radar. They like them because they're names that they see and they feel they understand.
They like to hate them.
Well, also, but behind the scenes, they're complicated things. If anything, Lloyd's now a much more simple operation. For me, is a bit more easier to work out. It's a good play in the UK economic recovery. There is exposure to the UK housing market, which is a good thing because it's resilient. And while the bank should benefit from any rate rises, don't forget that also does hit mortgage holders, and Lloyd's has got the biggest mortgage book. And
that's something that everybody's got their eye on
Indeed.
As well. So lots of opportunity there.
I think so, yeah.
In UK banking and in the banking sector as a whole. Well, Mike Delken from News.Markets, thanks ever so much.
Thank you very much.